Welcome to the Wyoming Women's Business Center's 2021 webinar series. Today's presentation is 8 tips for small business financial management. I'm Christine Langley with the Wyoming Women's Business Center, and I'm going to be your speaker today, along with our resident financial and bookkeeping expert, CPA Derek Campbell. Welcome, Derek. Thanks for being here.
Thank you, Christine.
All right. So everybody, you're going to notice the GoToWebinar control panel on the right side of your screen. I want to call attention to the questions panel. If you have any comments or questions during the webinar today, I'd like you to use those to communicate with me. And then immediately following this presentation, we're going to launch a survey. We ask that you stay on just for a few short minutes to complete the survey because this provides us, as well as our funding partners, with valuable information. So all participants are muted to minimize background noise. So once again, if you have any questions, just use that questions panel within your control panel. All right, so thanks again for joining us today. On our agenda, we're going to get started with some quick information about WWBC, and then we'll dive into our topic and finish up with a Q&A. This is our new 30-minute format, and we appreciate everyone joining us on what might be your lunch hour. The WWBC is a nonprofit organization whose mission is to enable and empower Wyoming entrepreneurs. We have a special emphasis on women, of course, who are both economically and socially disadvantaged. So we do our programs distinctly for that demographic. And the first is our business counseling and training program, which is always free. The second is our microfinance programs, where we offer microloans and individual development accounts, which are matched savings accounts. The third is an artist development program that we run in conjunction with our Works of Wyoming store in downtown Laramie. And then lastly, we launched last year the COVID-19 support program that has some specific benefits to businesses that were impacted by the global pandemic. All right, so let's get started with our topic today on financial management. We're going to go over some tips. And our first #1 tip, it's likely a rule that you have heard before. And there's a reason that it's #1 on the list, because it continues to be the most important aspect in managing your business finances. We want you to keep your personal and business account spending separate. And that means that it's important to set up separate bank and credit card accounts specifically for your business, so you don't run the risk of spending from your personal account and forgetting to track those expenditures to your business. Now, a lot of business owners are tempted to secure their business finances with their personal funds, and sometimes even use business money when they're lacking some money in their wallet. Both these ideas are bad for lots of reasons. So I'm going to turn it over to Derek to give us some reasons and some examples why separation is so important. Derek?
Yeah, thanks. So I preach this to every one of my clients, and I've probably even worked with some of you in attendance today with this COVID-19 program as well, and you've heard me preach it to you as well. The biggest reason to keep your personal and business accounts separate is to save yourself on some time and some money. It takes a lot of effort to go through and separate out personal transactions from your business account. Even more effort to go through your personal transactions and include them with your business transactions. So just the amount of time and effort required to do so is going to set you back a little bit. Not to mention if you have to hire an accountant or a bookkeeper to help you account for those transactions in a software or in your system of any sort. So that's the #1 reason. I also don't recommend it because the IRS calls this commingling your funds. And long story short, you're basically facing an uphill battle the moment an agent discovers you've commingled your funds. It's a lot harder to substantiate your deductions at that point. So just a good habit to get into, keep personal and business separated.
So hopefully when you first started your business, you set up some business checking, business savings account. Usually anytime you set up banking, they're going to try to get you to set up both a business banking and a business savings account and do some automatic transfers, between those two accounts in order to reduce monthly fees. That's usually what banking institutions ask. And they typically always want to give you a credit card. So even if it's a situation where you certainly don't want to use credit cards or you don't want to go into debt, beyond the 30-day float, that's okay. But having that separate business credit card, having that separate business checking account is paramount from day one, even if it means you're transferring money or giving a loan from your personal money into your business account in the beginning, and that can be accounted for in your bookkeeping.
Yes.
All right. So next up, number 2 is establishing a strong budget and paying your bills, which really are 2 separate things, but we feel like they go together. So I combined them for number 2. So you've likely heard this one before. What I find with most of my clients is that it's really a problem of knowledge, really knowing how to set up a budget, and then time management in paying your bills on time. So having a budget is a lot more than just having a general sense in your head of what your bills are each month. It's actually a detailed plan of where every dollar and penny is going. And I highly recommend that you implement a zero-based budgeting plan. So if you're not familiar with how to establish a strong zero-based budget, then I encourage you to reach out to us at the Wyoming Women's Business Center and we'll teach you how to do that. It'll save you so much heartache going forward if you know exactly where your dollars are going, and it may even save you some money. So of course, we always want to make timely payments, and your ability to do that really comes down to internal organization and your own time management. I recommend using some type of software for your business bookkeeping and scheduling a block of time every week that you work on your bookkeeping. So is it going to be Friday mornings from 8 to noon? What is the time block that you can set aside? If you're able to do that, it's going to ensure that you stay on top of your responsibilities, because even though I recognize that it's not necessarily the fun part of your business for many of us, I could argue that it is absolutely the most important. So Derek, do you have anything to add here? I know you're a big QuickBooks fan when it comes to bookkeeping software, and so am I.
Yes, yeah, definitely a huge fan of QuickBooks, but there are a lot of other systems out there that work almost as well. So I think my biggest thing, just to reiterate what Christine was saying, is keep up to date on your bookkeeping. Find a system that works well for you and makes sense to you so that you don't get behind. And then keep track of your reports. If you're using a budgeting module within QuickBooks, take a look at it. Make sure you're keeping up to date on that so you can see, are you keeping up to this budget? Does your budget need to be corrected or amended or altered in any way?
Very good. All right, tip number 3, plan for the future and also identify growth options or opportunities. So planning for the future and identifying growth opportunities, part of future planning is also having some kind of a cushion or a backup in the form of what I like to call an emergency fund. So if you aren't able to pay yourself for a few months or even more than that, are you prepared for that? Now, I know that some downturns in business just cannot be planned for, like this last year when we've had a global pandemic and we had certain businesses just literally shuttered within hours. But I find that having at least 6 months of expenses in savings is a good rule of thumb for small business owners. So it'll make the highs and the lows of business more palatable if you're not living month to month or paycheck to paycheck or owner's draw to owner's draw. So Derek, what's your take on emergency funds?
Yeah, emergency funds are so important. I stress that to all my clients, making sure you have enough cash reserves to get you through your slow season. Almost all businesses have their hills and valleys throughout the year. So even if you're in your busy time of the year, you might find yourself flush with cash. Plan for the off season a little bit there too. Just because you have cash now doesn't mean maybe it's all available to spend. Be sure you're saving up some for emergencies and also just to get through your slow time.
Very good. All right, growth strategies and planning. So as a small business, you always want to keep your eyes out and alert for any kind of growth opportunities. And this can come in many different forms. It can be increased market penetration or even market expansion. a product or service expansion, even an acquisition opportunity. Somebody's going out of business and you decide to buy their customer list or, buy their business altogether. If you want to learn more about growth strategies, you'll find a webinar I did last month specifically on this topic, and it's saved on our YouTube channel. You can just go to youtube.com and search Wyoming Women's Business Center, and you'll see a webinar. It's a quick 30-minute webinar specifically on growth strategies if you're interested in that. All right, developing a billing strategy is up next. Now, this is the opposite side of paying your own bills on time. We want to be sure that you have a strategy for your customers to be paying you on time. So we've got a few ideas to help make that happen. So Derek, can you give us some insight on billing strategies?
Yeah, I think my biggest insight on billing strategy is don't get lost in your own accounts receivable. Make sure you're staying up to date and you have a good, solid system in place that you can track your outstanding invoices. You're able to apply payments appropriately. Setting up good, solid terms on those invoices. Maybe if you're having a hard time collecting, you could offer a discount to clients that pay early if you have credit terms, things like that. We've talked about it a couple of times. I'm a big QuickBooks fan, but find a system out there that works for you that will help you with your invoicing. If you're doing all of your invoicing or billing on paper, you're probably going to get lost in that and make some mistakes. Collecting cash is going to be the lifeblood of all businesses. So don't get lost in your accounts receivable.
All right, cash is king. We definitely want to collect for new services or products that we're selling. Okay, so we've already mentioned it a couple of times, but tip number 5 is invest in a software. Most people know that we at the Women's Business Center are big fans of QuickBooks. We're actually giving away free subscriptions right now while supplies last through April 30th. So if anyone is interested in a subscription, you can reach out to us, and I'll have some contact information up on the screen at the end of this webinar. So you can contact us directly to get a 1-year Simple Start subscription. It's not the only software out there that can work. There's lots of options. I think the important thing for small businesses, or in our case at WWBC, we work with mostly micro enterprises. A micro enterprise is a sole proprietorship or a business that has less than 5 employees, and it usually takes less than $30,000 to start the business. So we really specialize in micro entrepreneurs or micro enterprises. So the important thing to remember is that you choose a software solution for your bookkeeping that makes sense to you, because you're the person that's going to be in it every day, or at hopefully bare minimum once a week. So computers, software, the internet, and cloud storage, these things are not going away. And it's far past time you jump on board if you haven't already. So if you're still doing manual bookkeeping in a ledger or using spreadsheets like Derek was mentioning, I'm talking to you. So Derek, what do you talk to clients about, or what do you tell clients when they reach out to you and they're just sort of afraid of software solutions, or just the change and the learning that's required for them to implement a software? How do you overcome that or encourage them beyond that fear?
Yeah, it's a great question, and I encounter it quite a bit. I think my first piece of advice is remember that QuickBooks isn't the end-all be-all. I know that there are a lot of industry-specific softwares out there, and there's honestly a myriad of different available accounting, bookkeeping softwares. If you've tried QuickBooks and you don't like it, don't give up on an accounting software. There's probably something out there that works for you. The other thing I find happens pretty common is clients just don't give it as good of a shot as I think they could. And, do the trial, give it your best effort, reach out for help if you can, reach out for any of the resources available in Wyoming that will offer you help, and just get going on the right foot. Keep up as best as you can. Even if you're not doing it perfectly, at least you're giving it an effort, and it's going to pay dividends in the long run, I promise.
Yeah, maybe we should talk about some of those free options for people. So the Women's Business Center, right now, we're contracted with Derek in order to specifically help our clients on launching and getting set up with QuickBooks, so he'll help you review your chart of accounts and make sure everything is set up correctly and kind of show you the basics of QuickBooks. We also have some online tutorials that are on our YouTube channel that you can access for kind of quick training, I would say bite-sized trainings. If you just need to know how to write a check in QuickBooks or how to do your reconciliation, you know, you're at a certain point and you just need a reminder of how to do that. These are short webinars. Most of them are under 5 minutes long that embed screenshots that show you exactly how to get to where you need to go. We did those tutorials on both our online version of QuickBooks and also the desktop. So regardless of what version you have, those tutorials should help you. In addition to that, the Small Business Development Center also has a QuickBooks Pro advisor on staff. His name is Rob Condi, and he's available to work with you on a one-on-one basis at no charge if you register with SBDC in order to review your QuickBooks. So lots of free resources out there, no excuses to get you up and running on a software program. All right, number 6, pay yourself and pay the IRS. So one of the biggest mistakes I think entrepreneurs make is not paying themselves a wage from the very beginning. And they think that they should reinvest all the money back into their business, and they always come up with something else that they should buy for the business rather than paying themselves. And that essentially means that as the entrepreneur, you work for free. And oftentimes you have to pick up some employees, whether they're, you know, part-time or even seasonal employees. And even if they're part-time or seasonal, you get to the end of the year and you realize that your employees actually make a lot more money than you do. And so in the beginning, while it can seem a little noble to do that, it's really just a recipe for burnout. And it's important to take an owner's draw regularly from the beginning of your business once you can reasonably afford it. And if your business can't make enough profit to pay yourself for working in it, then it may be time to ask yourself that hard question of, is this truly a business or is this a hobby? And I really have no judgment around that statement or around that question or how a client answers that. It's what's most important to me is that you're honest with yourself as to the profitability of the business and how sustainable this is going to be for you long term if you're not able to pay yourself. So on the second end of this tip, you're going to want to set aside taxes when you are taking an owner's draw or paying yourself, and make those quarterly estimate payments so that you don't get behind to the IRS and you don't end up having a big tax bill that you weren't prepared for. So Derek, can you talk a little bit about your recommendation that you make to clients in regards to an owner's draw and maybe the percentage that they should set aside for taxes when they take that owner's draw?
Yeah, you bet. Small business owners, one of the hardest things I have to deal with is small business owners that aren't prepared for their tax bill at the end of the year. Just as a general rule of thumb, roughly 30% of the profits of your business, set that aside, make your quarterly estimated payments, just be prepared. That way nothing unexpected comes and you don't want to get behind with the IRS. That's just a pain. As far as the taking owner's draw, I couldn't agree more with what Christine's saying. I talk about this a lot with my clients, is training your business. If you train your business that your business has to produce enough to also pay you and compensate you for your time and effort, the more you train your business to get to that, the more success you'll find in the long run. I agree, Christine talked about how it may seem noble to sacrifice paying yourself to put the business first. But yeah, I see it all the time. Burnout is too much in small business owners because they forget that, it's supposed to pay them as well. It's a business. You're still working there. So don't forget to pay yourself.
Excellent. All right, number 7, establishing healthy habits. Now, we all know that healthy habits are an important area of your life. But it's especially important when it comes to financials. So we already talked about time management, carving out a block of time to work on bookkeeping. And now I want to highlight really important internal controls that you should establish so that you don't set yourself up for fraud or embezzlement problems down the road. So Derek, can you give us some examples of some internal controls that every small business should have in place?
You bet, yeah. Especially with micro enterprise businesses, I recommend the owner reviews all the transactions. So if you're able to do your own reconciliations each month so that you're getting to look at every transaction coming out of your business account, coming in and out of your business account, and you're the one that's signing off on checks or expenditures, things like that. If you do have employees available to help you out with some of the financial duties, I think that's awesome. If possible, delegate those tasks to multiple employees. If you only have one employee you can delegate to, just be cognizant of the access you're giving to that employee. If you give too much access without enough oversight, you're creating opportunity. And opportunity is, part of the fraud triangle. So that's the easiest way to get yourself in a situation you don't want to find yourself in.
Absolutely. And so I'll share a story with you guys from one of the first businesses that I ever owned that I opened in 1999, as I'm dating myself here. But one of my first businesses, often this happens also with micro enterprises, is we hire friends and family. And that can be a really positive thing. It can also be a very sticky and messy thing. And I hired one of my best friends to handle, kind of administrative duties. And then I got her into a lot of the bookkeeping. This was a very high trust employee, obviously, because I had known this person for so long. And unfortunately, I left windows open of opportunity there for embezzlement. And that's exactly what happened. I was able to catch it pretty quickly because I did the reconciliations at the end of each month. But had I set up some stronger internal controls, I would have known about it a lot sooner. And some things can be sneaky when it comes to embezzlement or when it comes to employees taking advantage of a situation. So in my case, I was selling a product and I didn't have good inventory controls on that product. And so rather than customers making the check out to my business, she had customers making checks out to her personally. And so that was more difficult to find. Took me a little bit longer to realize that I had product going out the back door because I didn't have the inventory set up. So all kinds of things to think about in your business. This isn't meant to scare you. It's just meant to put in some healthy habits so that you don't get taken advantage of. Next up, I just want to mention frugality. And when we talk about habits, now recognize that frugality is different than being cheap. I said frugal, and frugality is really a habit that you can develop. It's basically the habit of asking yourself, can I get this product or service for less? Or can I buy used instead of new? Can this particular purchase wait? Because sometimes waiting to buy something is an opportunity to save money for that time period. Or can you leverage this purchase by using credit or by asking for certain payment terms? Because again, elongating out how long it takes you to pay for something can sometimes save you money up front. And then lastly, I always like to mention cybersecurity. So cybersecurity is directly related to financial health. And I encourage you to look at our series on cybersecurity that we did in February. This can also be found on our YouTube channel. My favorite in that series was a webinar that we hosted with Laura Baker, who's the executive director of Cybersecurity Wyoming, or Cyber Wyoming, sorry. And it's specifically on managing passwords. So if you're still operating in an address book with Post-it notes, it's time to upgrade your password management system. And that's all part of cybersecurity. And it's also something that you need to put in place with your employees so that you don't have a Post-it note with a password sitting on your cash register. This is not cybersecurity. All right, Derek, have you had any issues with cybersecurity with any clients or things that you counsel on, things you've seen?
Yeah, I mean, I definitely deal with this sticky note situation pretty often. And then, yeah, to go off Christine, even if you're having somebody help you with your record keeping duties, be cognizant of sharing access passwords, logins, especially bank accounts or financial institutions, because you're eliminating that audit trail at that point in time. You're giving too much access. So I love the cybersecurity piece here.
Okay, terrific. All right, last but not least, number 8. My final tip for everyone is know when to ask for help. Okay, it always amazes me how many small business owners in Wyoming try to go it alone, especially considering all the free resources that are available to them. It's actually quite remarkable the amount of support that's offered to Wyoming businesses. I've never seen the level of support and individualized attention in any other state. And I've lived quite a few places, started in California and kind of have been all over the Western US. So maybe it's our small population size, but there's just no reason to exist on an island. And if you're on this webinar today, that means that you're at least interested in reaching out for some additional assistance. So if you're stuck or you have any questions, the Women's Business Center is here to help. And Derek, I wonder if you can share some examples or some stories of clients that have reached out to you for financial or bookkeeping support. What are some of the most common issues or requests that people are asking you for help with?
Yeah, I'd say probably the most common issue or request I get asked for help with is, how to categorize certain transactions. I think one of the best pieces of advice I could give to all of you small business owners is remember that your bookkeeping is for your own business insight, right? We don't do books just because we have to file taxes, even though that might be the reason we're all getting caught up on our bookkeeping at the moment. Remember that it's more for your business. So do what makes sense for you, and your tax preparer will help you get it sorted for the tax return. I also get a lot of questions about business insights, or I don't know how to read these reports, things like that. This is a great opportunity where if you can keep your books up to date, reach out to one of the resources Christine has already brought up and ask them to run through your reports with you. Also reach out to, there's plenty of business networks out there, or, you probably have a support group of some sort. Reach out to them and just compare notes. Hey, this is what's happening on my financials. The last thing I always recommend on the financial piece is just be looking at your reports fairly often, once a month, even once a week is not too often. And you will just innately start to pick up on certain trends, and you'll start to draw comparisons between non-financial and financial data. And you'll be amazed at the insights it will give you into your business, even without having to have a finance degree or an accounting degree.
Absolutely. As I grew through my years of business ownership and met with my accountant and tax preparers, or even at some point, I was meeting with a CFO of a company, that I managed. And for a long time, I would have to say, can you give me another quick lesson on this balance sheet? Because I don't speak credits and debits. Help me understand, the liabilities and how this is balancing and how this adds together. So it's normal if you don't have a finance background to ask those kinds of questions. But again, these people are there to support you and help you. It's what they get paid for. So don't be embarrassed to ask questions. I tell women the same thing when you go to the doctor. Bring your list with you of questions. You don't need to be intimidated. It's the same thing with your attorney or with your accountant or with your bookkeeper. All right.
Yeah, exactly.
Yeah. I know. You probably like it when people show up with their list of questions, huh, Derek?
Please ask all your questions. We don't, especially, bookkeepers, accountants, we don't expect you to know how to read your balance sheet or how to interpret all of the different financial pieces. But if you come asking questions, or if you have certain questions, then it gives us a better idea of what you're interested in knowing about your business and how I can point you in the right direction. So questions are awesome. It helps me understand where I need to focus my efforts more.
Absolutely. All right, so we are going to open it up for questions now. If you guys that are on the call today want to type in some questions, Derek and I are going to be fielding some of those questions. So I'll give you just a minute or so to type in some additional questions. I've got some already up on the board right now, Derek. And I'll just go through our funding partner slide here. The Women's Business Center, we are a nonprofit organization, standalone nonprofit. And so we work with several partnership agencies in order to secure our funding so that all of the services that we provide to clients can be 100% free. And so our primary funding comes from the U.S. Small Business Administration, and that is a grant that is matched by the Wyoming Business Council. Of course, we're thankful for all of their support and guidance of all of our partners, and we look forward to the work ahead. So I'm going to leave it up on this screen as we take some questions. This is contact information for both one-on-one business counseling and also specifically our COVID-19 program. So if any of you are interested in that QuickBooks 1-year subscription, it's a QuickBooks online subscription, and you can reach out directly to Veronica Donahue at her email address or phone number, and she can get you set up with Derek in order to receive that QuickBooks subscription. So I do have one question here. It says, how much is QuickBooks after the first free year? And of course, the first year is not totally free, but just the Women's Business Center is floating the bill for you. But I believe that Simple Start package, isn't it around $236? Is that right, Derek?
Yeah, roughly. And it'll be at whatever rate Intuit has it at that time, but roughly right now it's around $236.
Okay. And so, you know, Intuit is a business and they like to increase their prices. 20 years ago, I paid under $100, you know, for a QuickBooks subscription. But so it could be up to $250 a year. By next year, I would budget somewhere between $225 and $250. And I think that you should be safe, which is why it's such a great value if you're able to grab that. Okay, another question was, are your free QuickBooks always cloud-based? And the answer is yes, we are pushing people towards the cloud. The Women's Business Center does have a few hard disks available of the desktop software from previous years. It might be a 2018 or a 2019 version that I'm happy to mail out if somebody is interested in that. But my recommendation is that people move to the QuickBooks Online because the cloud-based solutions are certainly the future. And it's QuickBooks' job to make sure that they never lose your data. And so there's also backup methods that you can take from that. Okay. Next up, you mentioned that you have some free subscriptions available on QuickBooks. How do we get on that? There you go. Call Veronica, and her information is up on the screen right now. It says, another question, tip number 4, late fees weren't discussed if there's time. Derek, do you want to talk a little bit about issuing late fees? I know sometimes people will do a percentage, other time, of the invoice, depending on what type of product or service they're selling. Other people have kind of a flat late fee of, $25 or $100, or whatever. Can you expand on late fees and how you might use those in order to encourage people to pay on time?
Yeah, you betcha. Late fees is definitely a common way of, if you're having a hard time collecting on your invoices, you could implement a late fee policy. Basically just saying, hey, I'll give you 30 days grace period to pay this invoice. After 30 days, I'll automatically charge a late fee. I'd say probably a fairly common fee would be around 2%, depending on the industry you're in, obviously. But let's say you charge a 2% late fee after 30 days. And then, you could even create a policy to continually charge a late fee every 30 days that it goes unpaid. QuickBooks has a feature you can turn this late fee on automatically, or any other software you might use. I just caution you to do the automated features. We all have certain customers or clients that we maybe don't want to charge late fees on because they're a little larger than the others. So just be cognizant of when you use the automated late fee modules within those accounting softwares.
Okay, great. Another question is, what about Venmo and PayPal accounts? This person is asking, is there a charge for these accounts? And how do you feel about having those types of services as part of your business or part of your, I would assume, business collections? Do you have any clients that take money via PayPal or Venmo?
Yeah, PayPal is super common. PayPal is a little interesting. It almost acts as like another checking account for your business. So you can collect payment via PayPal, and then it sits in your PayPal until you transfer it into your business checking account. So if you use PayPal or I would recommend, if you use QuickBooks, connect it in QuickBooks. If not, PayPal will give you monthly statements, so you'll still reconcile that account the same way you always do. I do have a few clients that use Venmo in their business for collecting payments. I would maybe caution you a little bit on that one, especially if the volume of transactions gets fairly large. Venmo is intended more for individual use. It's not intended as a business collections platform. So, a little bit of Venmo is probably fine, but I noticed it can cause quite a bit of headache in the long run if you use it very, very frequently.
Yeah, we kind of get into that personal versus business account thing, right? Because it's not set
Exactly.
up as a business software.
Yeah.
So on the heels of that, someone asks, is Square best to collect credit card payments? So I've done a little research on this for some of my own businesses, so I can take a stab at this one. So Square is very well known and was one of the first credit card processors that was sort of separate from your banking institution. And at that time, it was much less expensive because you didn't have to have the physical large card readers that were connected to a hardwire internet line. So now I'm really dating myself. This was like 2000 to 2010 when this stuff was happening and coming out. But now the way that Square calculates its fees is through a flat percentage. So it's a little bit different than its direct competitors. So the two largest kind of mobile credit card processing systems out there that I know of right now is Square and Clover. Clover, C-L-O-V-E-R. And they're different based on how they calculate credit card fees. So with Square, they have a flat percentage that they charge if you swipe the card using a card reader. And then they have a flat percentage that they charge if you actually text in what the credit card number is, which is what, of course, most people do because they don't have their credit card reader, swiper, handy. Now, when a flat fee is charged, it's very straightforward for you to know exactly what you're paying in credit card fees. However, every single credit card that someone uses is coming from kind of a different bank, and that bank has its own processing fee that it's charging, and then Square or Clover is tacking on to that. So Square is really straightforward because they have a flat fee. But with Clover, Clover is adjusting what your fee is based on what the bank transaction fee is. So for example, a Visa card from Citibank might cost 2.25% in a banking transaction, and then Clover might add another 0.25% to that. So your total transaction fee is going to be 2.5, where if you ran that on Square, your total transaction fee might be 3.5 because that's their flat rate. So over time, if you looked at all of your credit card transactions, it's likely that Clover is going to cost you less because they adjust their fees based on the bank transaction fee. Depending on what card somebody uses, the bank transaction fee might be higher. American Express and Discover are often higher than Visa or MasterCard, but it really depends what bank it comes from. So I know that was kind of a long, complicated answer, but hopefully that made sense. Okay, we're running a little bit over, but I've got a lot of really good questions, so I'm going to throw this one out to you, Derek. We talked a little bit about PayPal. What about Zelle or Zelly?
Yeah, similar to Venmo.
Mm-hmm.
I think it's intended more for individual use. The advantage of Zelle Pay and Venmo is obviously the fees. There's no fees charged there. So I can see why there's the draw. Just be very careful of that personal versus business line, and you don't want to cross that. So just keep that in mind.
Okay. And then let's see, I'm a service-based business. Is QuickBooks still a tool I should or can use? I think that's a resounding yes.
Yes, absolutely.
All right, and then last one here. How do I know when we're ready to expand or take on employees? All right, so that's another webinar, or it's a one-on-one counseling session. It really comes down to the cash flow, of your business, when you can afford to take on an employee, or when the demand of your business is growing and you can see that the cash flow that you're going to have coming in a month or 2 months is going to cover the expenses of an employee. So if you want some one-on-one support with answering that question, we're happy to dig into your, financials and see what your growth is, and talk about what your options are as far as taking on an employee. Often taking on an employee can help your business make money, right? Like if you hire a salesperson, or hire someone to generate additional revenue, you just want to set a timeline of how long you're going to give that person to ramp up to essentially be paying for themselves, right? Bringing in enough dollars to cover their salary. So again, if you want to reach out for a one-on-one counseling appointment, we do this all the time with clients. We're happy to review anything with you. Okay, I've got someone, this is just a personal question, I think, for capital clarity for Derek. So Derek, I've got a board member here of a nonprofit. They're required to do a financial audit and they're having trouble finding someone. So does your firm, Derek, do you do financial audits for nonprofits?
I don't do any assurance work at my firm, unfortunately. Yeah, I only consulting, tax prep, and bookkeeping, payroll, things like that. No assurance services, unfortunately.
Okay. All right.
Yeah.
Well, on that note, thank you everybody for attending today and staying on for our Q&A session. If you're interested in upcoming webinars, you can always find them on our website at Wyoming Women's Business Center. Just click on the training tab and you can register, of course, for free for any of our upcoming events. And so as we close out today, I ask you to complete the survey that's attached to this webinar. It'll only take you a couple minutes. Thanks again, everybody, and hope you have a great weekend. And thanks, Derek, for joining us.
Yeah, thank you guys.
All right, bye, everybody.